Warren Buffett might be the world's most famous investor. He is certainly one of the most quoted. For example, be fearful when others are greedy and be greedy when others are fearful is constantly making appearances in articles and comment sections. But now as retail investors buy the dip, people have outright rejected the person that they once quoted. So is Buffett right to be worried right now, or should he buy the dip? You came here for the truth, so let me unveil that for you. I just got a quick video to talk about what Warren Buffett has done. It has been an important lesson for people to learn, not what somebody does on a day-to-day basis, but to see the current events as they move through and how these big investors who have had successful careers, not over a one cycle period, not how well you did between March 2009 up until 2020, anybody can do well in a bull market. What we have to look at is decades after decades of their analysis and of the effort that they've put in. Have they been able to, number one, beat the market and have their strategies proven to be successful? There are only a handful of managers who have done this over this period of time. Literally only a handful of them. In most cases, they cannot beat the market, and that's why we have seen the rise of passive investing. You can see here Warren Buffett and what he did. It has shocked many people, particularly those in the past couple weeks. I made some comments about what Buffett did with the airlines, and these were largely rejected by many, and now I have the validation. I'm going to get into all of that. We're going to show exactly what's been happening with Berkshire Hathaway and Warren Buffett. Let's begin. Buffett stays on the sidelines with cash rising to $137 billion. Clearly, they are not seeing the opportunities that many retail investors are looking at here today. $137 billion, they can buy major corporations outright with cash, and yet they feel this is probably not the best time to be buying anything because we have a lot of uncertainty ahead. Now, you might think to yourself, the stock market from this point on is going to go up. But the way that Berkshire sees it is that there are a lot of question marks. And without those certainties, how can you put down money, particularly we're talking billions and billions of dollars here, into something when you can't be sure of what the market is going to look like a year from now? What is the economy going to look like in a year from now? He, in this case, with the airlines, clearly sees that this situation is going to have a major impact on how many people are taking flights well into next year. So why hold on to the airlines while you're losing money potentially for a period? They simply take the losses and they can move on. Here at the bottom of the CNBC article, it simply outlines the fact that the company spent just $1.8 billion buying stocks and just $1.7 billion repurchasing Berkshire Hathaway shares. This is important because when you look at it comparing to some other companies and comparing it to last year, it is a very different story. And essentially what he said, he has no problem talking about it, the valuations right now are still too high because of the Federal Reserve. He talked about that. He was very open about that. Because the Federal Reserve came in and reacted to the situation, buying anything and everything, the valuations are currently not attractive. You can see what has happened over the years. This chart goes back from March 2010 up until the present, and they've been growing their cash pile here all along the way. They have been buying back shares of Berkshire Hathaway. They have been investing, but it looks like they'd rather keep cash on the sidelines for a time in which it's a better opportunity. They haven't found that opportunity. Clearly, the market's coming down by 30% wasn't enough for them. And this was the big news. Warren Buffett says Berkshire sold all of its airline stocks because of the current situation that's taking place. I did some videos about this suggesting that what Warren Buffett had done, Berkshire Hathaway more specifically, was that they were getting rid of their airline stocks as the prices were falling. And I had many people say, no, this is just because of the 10% rule. They have to stay under the 10%. You don't know what you're you're talking about, you're a liar, and so on and so forth. But now we see completely out in the open, he's talking about it. This is the reason why. It's very clear. If you see into the future, looking at a particular industry and it looks weak, it looks like it's going to be taking a hit for a while, why are you investing in it? They simply cut the losses and they move on. The prior stake, worth north of $4 billion, included positions in United, American, Southwest, and Delta. At the bottom, he added, when we sell something, very often it's going to be our entire stake. We don't trim positions. This is exactly what I'm talking about. Glad it was validated here. It's just interesting to see how many people play the double standard. They quote the guy on one hand, they try and use his methods on one hand, but then they look at his favorite indicator, like the market cap to GDP, and said, you know what, that doesn't count anymore. I bought 7 shares of Amazon. I'm doing good today. Well, you can pick and choose whatever you want, but this is the data. This is the information. I thought it was interesting that he specifically mentioned we are willing to do something very big, but at the moment we haven't seen anything that attractive. They're sitting on $137 billion. They could buy most companies right now, and yet they'd rather keep it in cash, making essentially nothing. That's how serious this situation has become. They've been growing their cash pile all along. They're looking every single day, looking for opportunities, and they're not buying. The stock has done well over the course of the previous bull market, of course. More recently, it hasn't performed as good as some of the others out there, but certainly a long-term trend, there have been many good decisions, but now things have really opened up. Big problems are certainly ahead. We were all waiting for Buffett to buy preferred stock in the airlines or Boeing, as he did in some banks in 2008. He didn't. Does this mean he thinks the crisis is far worse than the Great Recession and not easily reversible? My bet is absolutely yes. And then if you look at the comments, everybody is trying to shred this guy to pieces, saying this guy is a hack, this guy doesn't know what he's talking about, Warren Buffett is nothing, and so on. Now, who cares about Warren Buffett, really? Who cares about what Berkshire Hathaway is doing? You need to look at the data. And what does the data tell us? That we've got an economy all around the world, global economy right now, that has turned the switch off. But if we go back to 2019, if we go back to 2018, we see the problem that is underlying all of this. And that is we were running on fumes to begin with. This was simply the pin that popped the bubble. If you're talking about what stocks to buy, if you think that certain stocks will do better currently than they are today, I'm sure there will be opportunities. But when we have underlying issues, the economy simply cannot be sustained by printing a bunch of money and buying corporate debt, by printing a bunch of money and buying all this nonsense that the Federal Reserve has done, like junk bonds, municipal bonds, and everything else. It is completely gone haywire, and the Federal Reserve is doing this intentionally because they want to create this moment in which there is siege. They take over the financial system, and of course this exists with all of the other central banks out there, all actively doing the same thing. They are using this as an opportunity to do so, and I keep seeing the comments over and over and over again. There's a merger, there's a merger. There is no merger. The Federal Reserve is taking. That's all for this video. If you found that informative, please give me a thumbs up. When you do, you're supporting me. I want to thank you for that. If you want to check me out on Instagram and Twitter, I do have content every single day on there as well. That's different from what you're seeing here. Check it out at The Money GPS. I just want to spend a moment here to thank every single person who supports me on the channel, whether that's through something as simple as a thumbs up, or maybe you're watching the ads. I have so many people that are generously supporting me over these years through Patreon, through PayPal, through the different methods that are available. Thank you to each and every single one of you. It really means a lot when I see the positive comments coming through. Despite all the negativity, I have received more negative comments now now than ever before because people feel validated now that their 7 shares of Amazon are worth more, instead of just looking at the news and looking at what's happening to the global economy and how we haven't even entered into the worst of it all, and they are smiling and laughing, and it makes me sick. So I just want to say thank you to all those supporting me. It's really important. If you want to learn how to sell online, I've created a free e-course that gives you a step-by-step explanation on how to do that for free. Check it out, theamazongps.com. My books completely outline what's going on in the financial system today. They're extremely relevant right now. If you want to flip through them to see if you like them, check it out at the link in the description. If you want the audiobook, themoneygps.com. Have you seen this video yet? If not, definitely watch it. If you click on it, it will take you directly there. I'll see you over there.